Hello and welcome to our first webinar, which is focused on how to trade the US presidential election, or better said, the US election, because as we will discuss further down the line, this is not only about the US presidency. Traders will also be focused on who wins the Senate, and there is a big question mark regarding the status of the Republican-controlled Senate for now, because that's an important part of every election. First of all, we want to share with you that CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. And you should consider that when before you start investing. And these webinars are for general information only and are not intended to provide trading or investment advice or personal recommendations. Any information that we discuss should not be construed as investment advice, and you guys should just focus on doing your own analysis and try to make the best of it. So to start with, I wanted to focus on a couple of major points. First of all, that these elections are not only for the US presidency between Donald Trump and Joe Biden, as you might well know, but also there are some seats in the lower house of representatives in the US and the Senate, as already mentioned. So first and foremost, we're going to focus on the electoral process in the US, which is the so-called Electoral College, which basically means that every state is voting for delegates that there on out vote for the presidency. So I wanted to share with you this first screen, which is that basically the current Electoral College map, where we see how the states are currently positioned. So basically, the key is to be able to run past 270 seats, and as you can see on these on the states map, there are several states that are blue. These are, most likely to fall into Joe Biden's camp, and the red states are basically representing Republican votes and Trump camp. And these brown states are so-called swing states that are very, very difficult to call, and currently most of the pollsters are not committed to announcing who wins these states. This map is actually 270 to win. It's an electoral polling website, and it's basically projecting a Biden win for now. But what you should focus as a trader during election night is basically to basically listen for the states that are being called. So the most important states are the key swing states on this slide. You can see them there: Pennsylvania, Florida, Wisconsin, Michigan, North Carolina, Arizona, Ohio, Georgia, New Hampshire, Iowa, Nevada, and Texas, which is unlikely to be a swing state, but still pollsters are saying that the race is kind of close to call. So you might be looking around the websites that are calling the presidential election, and they seem to be widely favoring Joe Biden. There is a key point here that basically that's what they did last time as well, when 4 years ago, when Hillary Clinton was very much favored to win the election, and that didn't turn out to be the way that most pollsters expected, and this can happen again. So whenever you hear one of these states called during election night, you need to be rather vigilant and see whether the market reacts to this in any way. So we have Pennsylvania as probably the most important state, and also the definitely the one which is very closely contested. And Trump won it, as you can see, by 0.7 points in 2016, and this kind of turned around the expectations, along with many other crucial states such as Wisconsin, Michigan. Well, basically, these were the states that he turned and allowed him to jump ahead of Hillary Clinton. So, and on the next slides, I'm going to show the current polling map. So there are more swing states here. So this kind of sums up the situation according to the polls. It's not a forecast. And as you can see, many states here are brown and hence are very much contested in who's going to win those. And this map gives you an idea of how important these swing states are. And basically for now, the pollsters predict that Trump can only win if he wins a big majority of those swing states. So if we look at the map, this will probably be Texas, Florida, Arizona, Georgia, North Carolina, and Pennsylvania. Like, this is enough for him to win. So that's the current polling map, and what we are going to focus on next is basically the 2016 results. As you can see, like there is way more red here than on the previous map, and there is no guarantee that that this result is going to get repeated. If anything, like, pollsters are said to be very much more vigilant this time when compared to 2016, trying to better predict the outcome of the election. So right now I'm going to pause with the presidential election and focus on the Senate map. So this is a very much key factor in this election, because for now Republicans are controlling the Senate, and regardless of who wins, if they keep the Senate, the policy agenda which Joe Biden has might be very, very difficult to push, because in order to raise taxes, he would need support from Congress. And on this particular issue, it's very much unlikely that he's going to get it, because Republicans are voicefully opposing any tax increases. In fact, they're more inclined towards lowering taxes. And as you might have heard recently, they are also very much focused on providing less financial support, less stimulus after this recession that we have been experiencing this year. So there are 6 key states which you want to focus on during election night for the Senate races, and these are Maine, North Carolina, South Carolina, Georgia, Iowa, and Montana. Now, all of these states are traditionally, well, maybe except for Maine and North Carolina, the other four are traditionally Republican leaning. So if Republicans are able to retain control of these states like Montana, Iowa, Georgia, South Carolina, they're going to get 50 seats, which is not enough. In order to retain control of the Senate, they're going to need to also take either North Carolina or Maine to have 51 seats. Because when there is a tie in the vote in the Senate, on a vote in the Senate, 50-50, the vice president is the one who's breaking the tie with his vote. So if Joe Biden wins and we have a 50-50 split in the Senate, this is going to be a very difficult time for the Democrats indeed, but Kamala Harris will have a deciding vote on the issues discussed in the Senate. So maybe from here on out, I'm going to cede the floor to our esteemed analyst Carl Capolingua, who can share some information about potential market impact.
Sure. Good afternoon, good morning, or good evening, wherever you are around the world listening to the presentation. Victor, I'm coming through loud and clear, I hope?
Yeah.
Good. Excellent. Well, yes, just following on and putting some numbers around some of the points that Victor made regarding some of the fiscal stimulus that would occur depending on which party wins. And there's quite a stark difference between the two. So if the Democrats should get in, there are estimates anywhere between even up to $3.5 trillion under their Build It Back plan, it's called, that could be hitting the US economy from 2021. The Democrats have stated that they intend to continue the COVID crisis unemployment insurance payments. So that's currently at $300 a week for unemployed workers. So that would continue. There's no indication necessarily of when that would stop, but certainly would continue in the short term. They're looking to spend quite a bit of money on small businesses, or supporting small businesses, focusing on removing red tape and just making it easier to innovate and do business. They say they're going to work on improving supply chains and promote innovation and the like. The most significant part of the package, however, is definitely the $1.5 trillion that is slated for infrastructure spend. So we're talking about new roads, new bridges, energy grids, schools, potentially even a national broadband system as well. Then also, we know that the Democrats, and this is one of the key and stark differences between the Democrats and the Republicans, are more about clean energy and sustainable or technology that is considered to be environmentally sustainable. Also, technological innovation as well. So there's definitely going to be some money heading towards that part of the economy. But, there is a modest but in there. The Democrats are proposing to increase taxes for some Americans. Now, if you believe the rhetoric around this, it should only impact those earning over $400,000. And that is roughly 1% of American taxpayers. So it's not a huge impact potentially in terms of numbers. But it's estimated that the other 99% of households will be largely unaffected by these tax increases. Not unaffected, businesses. We should see the company tax rate rise from 21% to 28%, and also a blanket 15% minimum tax applied to companies earning over $100 million. And these and other similar measures are expected to raise about US 2.8 trillion over the next 10 years. But, you can see from those numbers that the amount of stimulus that's going to hit the market, at least initially, is substantially more than will be taken out from those tax changes, order of magnitude of 10 times bigger per, in that first year. So largely stimulatory, net, it would be a big win. Having a look at the next slide now, the Trump alternative, not many points here because, and this is not a political statement one way or the other, simply because we're expecting pretty much business as usual if Trump does get back in. The stimulus that the Republicans are proposing is closer to US 1 trillion. There's been a little bit of a change in sentiment, I think, certainly from the president on stimulus. And I think you can see how important it would be in terms of political win to get that through before the election. I don't think that's going to happen, but bottom estimates I say about 1 trillion, but it could be bigger depending on the mood of the party. No change to taxes, of course, and we would expect that we would see less regulation going forward. On that point, I might go to the next slide, Victor, and have a look at some of the sectors that would be impacted, winners and losers under the two different scenarios. And again, it's very much Biden heavy, this information, because under a Trump presidency, we'd see pretty much the status quo. But if Biden should win, and as Victor suggested, there are caveats there in terms of them winning control of both houses, so largely expected to win control of the House, but the Senate is expected to be contested. But we would expect to see risks increasing on the antitrust side of things. So this is where regulators are looking to break up what they perceive as monopolies. So Facebook is certainly one stock that's been talked about as exhibiting monopolistic behaviour. Amazon also, Google has been in the news very recently as well. And Apple's probably the one least at risk amongst those. You could argue also, however, that if these companies were broken up into smaller parts, the sum of the parts is probably going to be worth more than the current whole is anyway. So that's not necessarily a downside for shareholders anyway. But it's a risk that we need to be aware of. In terms of winners out of a Biden win, well, certainly materials stocks. So we're looking at industrial metals, so stocks that are in the business of producing iron ore. I can think of a number of stocks listed both in Australia and in the UK. So BHP and Rio come to mind, but also locally listed Fortescue, but other industrial metals stocks as well. Engineering and construction companies, due to that big infrastructure spend, and clean energy and environmental companies as well. Even thinking of something simple like Tesla, who's targeting zero emission vehicles. So Biden, equals a bigger infrastructure spend, greater investment in green enterprises, and the flip side of that last point is that quote unquote dirty energy, so carbon producing energy companies may also be at risk. Therefore, probably the other major potential pressure point would be China, and we know Trump's presidency has been largely punctuated by his Twitter diplomacy, and it's a fairly soft trade war, but that's certainly one way to describe a trade war with China. And we would expect that Biden would be take a calmer stance, be more diplomatic in his dealings with China, whereas Trump would probably continue to escalate the situation, mainly because he thinks that that's more popular amongst his voter base. But it could lead to, the last point there, more closed economies, potentially between China and the US at least. It also has ramifications for countries like Australia that are aligned with the US, and we've already seen some restrictions put on Australian exports to China already come into play. So we'll throw back to you then, Victor.
Sure. So basically, while we have discussed the current kind of stance of the market. Sorry, the impact that is expected. Let's move on to the current stance of the market and see what we can expect from different scenarios. Like, for example, how important it is to differentiate between. Just a second. Yeah. Do you see my charts?
Yes.
I think
yes.
you do. So so basically, I wanted to focus on the FX market and mainly on the US dollar, as it has been testing some key levels, which are widely perceived as instrumental for its further direction. So basically, I wanted to focus first on the euro dollar and this test of a very long-term running trend line from the top of 2008 and 2014, which has been tested a couple of months ago, but the market is still kind of hovering around this 118, 119 levels, and there is no conclusive win in this battle between bulls and bears. And the election could well be the catalyst that we need to resolve this consolidation phase, which has been going on for now 3 months in this very tight ranges. And we don't only see this on this pair, we have also seen it in the pound, which also has Brexit on the line, and it's way more complicated to trade right now. However, this 120, 130 range, which we have been observing over the past really like couple of years is stands to be tested, possibly if we see a resolution, both a resolution to Brexit and an unlikely or not an unlikely, but an unfavorable resolution for the dollar in terms of the election. So what's an unfavorable resolution for the dollar in my mind? My colleagues Fawad and Carl might have their own opinions, but in my view, probably the most favorable scenario for the dollar would be a Biden win and Republicans holding the Senate. So basically, this kind of deadlock will block all fiscal efforts, which is actually good for the dollar because the deficits won't get higher than they already are, and that kind of stalemate from a political standpoint could be perversely supportive for the dollar and push some companies to even repatriate some flows from outside of the US to support their operations domestically. What do you guys think?
I'll let you go first.
Yeah, sure. I hope you can all hear me loud and clear. Please confirm, Victor or Carl, if you can. Excellent. So, well, before I discuss my views on the markets, I just want to talk about a few other things. Some things which you guys haven't discussed so far, I don't think. So let me just quickly share my screen, and then I will do that. So I'm trying to find the share button.
Maybe I need to stop sharing first.
Yeah, possibly.
Let's see.
Yeah. Unfortunately, it's not allowing me to share for some reason, which is
okay. So maybe you can talk me through, and I can.
Yeah. Okay. Let's just discuss what I was going to talk about anyway. Well, I was going to show the chart of the VIX. So if you can put up a VIX chart in front of you, first of all. And, you know, I'm not going to repeat much of what you guys have discussed already. But I want to provide some views on the lack of volatility that we've seen and briefly discuss whether the outcome of the elections really matter. I'll then discuss like tactical or practical. Yeah. Yeah, leave that on the screen for a minute, please. Sure. Just to give you an agenda of what I'm going to discuss, I'll discuss some practical ways to enter the market, either to trade the pre-election volatility or to hold a position heading into the election in order to take advantage of a potential rally or a big sell-off. Finally, I was going to provide some technical analysis on the S&P and the chart of gold and whatnot, but I don't think I'll be able to do that now, given the technical difficulties that we are experiencing. So Victor has put up the chart of the VIX in front of you. As you can see, it's not really, it hasn't gone anywhere in the last several weeks. Volatility has been compressed, and it looks like investors are warming towards a potential Biden win, who, as Victor mentioned, is leading in the polls. So while Trump is seen as a business-friendly candidate, I think that the fact that Biden will not be anti-China, as Carl mentioned earlier, makes for a less erratic candidate than Trump, who consistently moved the markets with his tweets during his 4 years at the helm. So I think some investors will prefer a quieter president. However, you can never rule Trump out, can you? A win for him is the biggest risk as far as the volatility is concerned. So if Trump wins, I think the markets will head lower initially on concerns over a smaller virus relief package, before potentially rebounding again on hopes that at least taxes will not rise. But whichever president wins, one thing is almost certain, is that monetary policy will remain very loose and for a very long time. So this means that interest rates will be near zero for a long time, and QE will be running near full throttle until the economy is strong enough to sustain itself. So beyond short-term volatility, I don't think any of the candidates will have a material impact on the longer-term direction of the markets. But obviously, it will be different for certain stocks or sectors, as Carl pointed out. But for the wider markets, I don't think in the long term, any of these presidents will have a material impact on the direction of stock markets because of the current situation we are in. Under both presidents, you will see increased government spending and the fact that monetary policy will remain low. I think that will be the ultimate driver behind asset prices. Now, some of you must be wondering, that while the information we've presented so far makes perfect sense, or perhaps you might totally disagree, but some of you might be really wondering is this, that, you want to know how to trade these markets based on whatever view you have. You may be wondering, for example, how do you trade right now and in the days ahead? And secondly, how do you position yourself to take advantage of the election volatility, if there is any? So in other words, how do you put theory to practice and trade these markets is what some of you might be wondering right now. Well, to help you make it a little easier, I think there are 3 key points I want to make from a more tactical point of view when it comes to trading the elections or avoiding it altogether. So first, I would say worry less about the elections and be more opportunistic about the now moment opportunity flow. Markets are trading in narrow ranges. If you can share a chart of the S&P, Victor, please. You can see that stocks have been trading in narrow ranges, same with FX. So, don't be too concerned about the elections and miss out fantastic opportunities that you might see right now. If you are bullish, for example, look to buy the dips, but take it from one level to the next, and then move on to the next opportunity. Okay, so what I'm saying is, just because we are heading into election, don't miss out on short-term opportunities. Secondly, if you want to position yourself for the outcome of the elections, there are two ways you can do that. Okay, so if you want to hold a position heading into the elections, there are two ways you can do that. The first is you can start building a position from now, right? So ahead of the elections, you can start building a position. So, for example, if you are expecting the markets to be going up, and you feel that stocks will continue to go up after the election, regardless of the outcome, you can go long on any short-term dips, such that once the markets start going higher, you can pay yourself some and then raise the your stop loss higher to remove the risk of the trade going against you. Now, you want to keep a portion of this open in case the markets continue pushing higher. Because if the markets do continue going higher after the elections, then that small portion of your open position can provide a decent profit. By the way, you could add to that smaller portion once the outcome of the elections are over, and if you still believe in your conviction. Conversely, if you think the markets will head lower, you can then look to short the short-term rallies now. And again, if you do this, make sure you take some off the table if and when there is an opportunity to do so. And then keep some in there in case the markets tank after the outcome of elections are known. Now, the alternative way of taking advantage of the election volatility, or potential volatility, I should say, is to wait until after the outcome of the elections, okay? So in this case, you will likely miss the initial move. But if you don't have a position open heading into the election, this means that your mind will be clear and can still find lots of opportunities in the days following the elections. This is really important because if you don't have a particular bias, you'll be very quick to spot and react to changing market conditions in order to take advantage of that momentum. You can also look to fade the result of the election. So if you recall from, I think it was November 2016, on the day when Trump was announced as president, stocks which had been trending somewhat lower prior to the announcement, then when the announcement was made that Trump had won the elections, the stocks dropped really sharply on the day. However, the markets then started to recover on the day, and then before you know it, it was a green day. And then in the following days, the markets just kept going up and up and up and up. So what I'm trying to say is that if you don't have a position going into the elections, you shouldn't worry, because you could look to trade against the short-term move, particularly if you see a key reversal pattern on the lower time frames. So once you do that, then you'll potentially be in a position to hopefully profit from such a big move. Now, unfortunately, I can't share my charts to discuss some more, practical levels that I had highlighted previously. But I'm going to pass the mic back to Victor. But yeah, if you do have any questions from any of us, please feel free to ask in the chat window. So back to you, Victor.
Yeah. So, Carl, actually, do you have any points first?
Yeah. Look, we obviously focus more on share market and stocks or
on share markets. Yeah, sure.
But I think, look, I think either result is going to see share prices move higher. I think a Biden victory would be more supportive of higher share prices in the longer term, whilst obviously those corporate taxes will go up and there'll be a very small, I think, net impact on personal taxes. The increase in consumer spending, in business investment that we're going to see as a result of that $3 trillion, potentially more, thrown at the US economy, amongst the backdrop of, as you've both discussed, of that loose monetary policy, I think is going to be more than supportive compared to any impact from the tax cuts. So I think we're definitely playing it from the long side. I've talked about sectors. Obviously, it's a very brief presentation tonight, so unfortunately, it's impossible to go into too much more detail.
We're going to have some more ideas next time.
Yeah,
absolutely. In a couple of weeks' time. So
yeah, and we can get stock specific, but certainly no, I think we're definitely playing it from the long side. And we are betting markets are predicting they're about 60% at the moment for a Biden win. Those markets are going to tighten. It's a 2-horse race, and inevitably in 2-horse races, they do tighten into the event. But we are expecting a Biden win, and he needs, as you say, Victor, quite correctly, he needs to pick up 3 seats would be ideal in the Senate, and that's a very real possibility. And of course, if he wins the presidency, it's made a little bit easier with him holding, or at least Kamala Harris holding the deciding vote. So I think the blue wave, as they call it, I think would be very supportive of equity markets going forward.
Yes, Carl or Victor, we've got a question from one of our participants. If you took the view of a delayed result or contested result in US election, where do you think the highest volatility will be seen?
Well, I think that actually this could be impact quite a lot the value of the dollar, because the US is perceived as a country where such things don't happen. They happen in Belarus.
Right.
No offense to any residents of Belarus that are on the webinar, but like the main the concept of an election in the US being questioned, contested, it's certainly going to impact the trustworthiness of the US government, because as we well know, the US dollar is currently the reserve currency of the world, and its status as a reserve currency has been questioned for some time. However, we don't have any alternatives for now, nor there are any candidates that are openly voicing their desiredness to be guardians of the reserve currency.
Yeah,
but this is also quite short term, and the other part is that obviously this is going to impact the domination of the US as basically the policeman in the world, and
yeah.
it has already been impacted by Trump's rhetoric, but it might get worse, because let's face it, historically, the reserve currencies of the world have been mostly tied to the army resources of the country that is holding the reserve currency.
I'd like to add that the Japanese yen could be one to watch. Especially the yen crosses like the Euro yen, Aussie yen, Kiwi yen, pound yen, etc. The Japanese yen has been consolidating in a narrow range against the US dollar over the last several weeks, months even. So when volatility contracts like that, usually you see range expansion. So the trigger behind that range expansion could be the outcome of a potential contested result in the US election. So I think if you are looking for trade ideas as a result of a contested result in US election, then I would say look at the yen crosses, like the Euro yen or the pound yen. But yeah, here's a chart of the dollar yen. As you can see, it hasn't really gone anywhere, while other dollar pairs have hit multi-year highs like the euro dollar has, the Aussie dollar, Kiwi dollar, etc. The dollar yen hasn't really moved much in the last several weeks, and after hitting a low in March, it recovered and then went back in the middle of the range. whereas all the other markets have continued to trend in the risk-on direction. So to some degree, this is because obviously the Japanese yen is perceived to be a safe haven currency, while the dollar has sold off against other currencies. So it's kind of offset each other. But in the scenario where we have a contested result or some other factor come into the market to cause a risk-off trade or sentiment, then I think the dollar yen could be heading sharply lower, but more I think euro yen or pound yen rather than the dollar yen.
So if I may add here also that the trade of piling into US stocks over the past more than 10 years now could end abruptly if this happens. Like, the security of the country is perceived to impact the security of financial markets, and we might have this huge repatriation flows of people taking profits on their US stocks and just bringing money home. And obviously the Japanese yen will be the biggest beneficiary from such flows, because there's a lot of capital hunting for yield in the US.
That's right.
And yeah.
What about gold? Do you have any views on gold in terms of an event where we have a risk-off reaction in the markets? Where do you think gold will be heading?
Yeah, the traditional risk-off reaction in gold is for a sell-off, but this might turn reverse in the case of a contested election, because well, the trustworthiness of the dollar, and obviously the lack of real alternatives, because we all know that Europe is in a tough spot as well, and the euro is not an alternative to the US dollar, let alone the pound, and it's actually the Chinese yuan that has been gaining favor over the past couple of months, and it's not a coincidence running into this hotly anticipated election. It's just that some capital is finding its way into China and perceives the response of the Chinese government to the coronavirus crisis as being the most adequate.
Yeah. Don't you think that a stronger Chinese currency increases the likelihood that the price of gold will go up? Because obviously China is one of the largest, if not the largest consumer nation for gold. So if the yuan is rising in value or appreciating, does this not imply that gold will become less expensive in China, and therefore demand from a physical point of view for gold should be rising?
Actually, over the past several months, I've been tracking data that demand for physical gold from India and China has been materially lower.
Okay.
Which is a very interesting phenomenon to observe, and gold prices have been actually going higher because of investors in the West buying gold.
Yeah.
In contrast to what we have had over the past 10 years. So it will be interesting to see if this continues, because there is this debate about gold being a reserve asset and central banks being very it's important for central banks to hold gold reserves. Well, if you look at the gold holdings of Venezuela, Turkey, and Russia, and those have been rising right into a crisis. It happened in Venezuela, which actually had the most gold reserves of any country only after Switzerland.
Oh, right.
And this didn't stop the currency crisis and the implosion of the political system and everything that happened in Venezuela. Now we're observing the same in Turkey.
Yeah.
As you see, the Turkish lira dramatically declining over the past several years, and while their reserve holdings are increasing.
Yeah.
And we're seeing the same happen in Russia as their currency is declining, but that's mostly related to oil prices and the decline there. So yeah, I think that gold prices are actually going to be impacted by different factors from now on.
Sure. I think one thing is clear, though, the trend for gold has been bullish, and we did see a decent sell-off when coronavirus first hit the markets in March, and then that sell-off didn't really last very long. So perhaps if gold does go down, we may see a similar reaction. A short-lived sell-off is what might happen, because there's a lot of people who are bullish on gold because prices have been rising and yields have been falling, and if uncertainty were to rise further, then as you mentioned, there's not many alternatives to gold. So I think I'm still bullish on gold, but it's difficult to be bullish at these levels. Maybe a small pullback is what we're looking for.
We've been circulating around this key level that used to be marked by
the 1920 level, 21
by the printing by the previous high in 2011.
11, yeah.
And there is still no resolution there, but there's a lot of people that are also focusing on the longer term trend and trying to figure out whether there is enough buyers at these levels to push the price higher.
Where would you say that the nearest support is if gold were to break down from here? Maybe if you could go to a daily chart or something.
I think it's around 1800 and on my I feel like the previous kind of hotly contested level has been 1800. So
I don't know. I mean, in the short term, we've seen gold, go down big here, again here. There hasn't been much follow through on the downside. If gold were to break down, it should have done so already, in my view. Yes, we are holding this resistance area here, which was previously support. But if we can rise above that box, we've got trend line coming in there. If we rise above that area, I think that should clear the way for further gains. Perhaps that could happen before the outcome of the elections are announced. If so, we could see gold rise back towards the 2000 level at least. But from a bearish point of view, you want to see a break below this trend line here, and a close below the lows of those candles, then that would be bearish, in my view, to take us down to this level here.
All right. So with this beautiful chart as background, thank you, Fawad. Maybe it's time to ask the audience if they have any more questions.
Yeah, we've got like 5 more minutes to spare with you guys. So please feel free to ask.
Just while the questions are coming through, we do have a template for a contested election. In the US, it was in 2000, so that was the Gore versus Bush. And,
right.
People might remember that the hanging chads in Florida. So the S&P 500 dropped just over 20% in a very short period of time, whilst that saga was going on. But after that, we saw a massive rally in equities. In terms of golds, gold also saw big rallies through 2001 as well. I'm not saying the conditions are necessarily the same.
And the dollar declined.
Yeah, so that's I think that's a reasonable template to answer Adam's questions. Adam's asked, in terms of what volatility what we could expect. So that's a template there. Potentially 20% fall in the S&P 500 and gold going on.
Yeah, but we have. Sorry to cut you off.
Saying in 2016, it wasn't necessarily a contested election, but it was a surprise result. And as you said, we saw that was about a 12, I think, up to 15% decline in the S&P 500. And then 2017 saw gold rally 30% as well. So, there's a couple of precedents potentially which could be reflected this year round. Initial downward move for equities, an upward move for gold, but in both cases, equities were substantially higher 12 months later after those election results.
I was just going to add that obviously past result is not indicative of future results, and things have moved on from then. The whole macro picture is completely different now. So you have to be careful when you draw conclusions from what had happened in the past in order to come up with ideas what might happen this time. Every time is going to be a unique situation. Just
we
wanted
have,
to. Go on.
We have one more question, which is from Adam once again, and he's asking for views on Bitcoin.
All right. Do you have a Bitcoin chart in there?
I think I might pull that one. Yeah.
Yeah, you need to clear the box here.
All right.
If you,
yeah. So here we go. This is the monthly Bitcoin chart. It looks challenging, It looks as if these levels around 1200 have been proven as a good place to sell for now. Which only means two things. If this level gets broken, we might see some recovering. Or are there any good ways to short Bitcoin? I don't know of any.
I think if we can rise and hold above last month's red candle, after the formation of that red candle, prices should have gone down. They haven't. So if we break the high of the last month's red candle, it would suggest that the sellers are getting trapped. So in that case, we could potentially see a continuation higher. And price action has been looking bullish on this time frame. Regardless, we had a false break below this low here. Prices have rallied sharply, breaking these highs, and that level has turned into support. So that's the way to go long. To go short, maybe if we get a false break above that level here, and if we go back below it, then rounded retest of that level could push us back down. Alternatively, you could look to short the low of this month's candle. If we break the low of this candle, then any rounded retest could see us go down, towards 8,000 or thereabouts. But yeah, at the moment, I think that the trend is looking bullish for Bitcoin.
Yeah, look, I agree on that. It's not one I follow. As I said, I'm more stocks focused, but just looking at that chart, I think if that can close, here we are at sort of 20th of October, so we're waiting for a close on that monthly candle. If it closes, here or better, I think that looks pretty supported. And Bitcoin's going to move very similar, I think, to gold. I think it's going to move on, expansionary fiscal policy in the US, loose monetary policy all around the world as well. So, and it's also a bit more of a risk-on bet now. Bitcoin, it used to be considered a risk-off bet, but it tends to move with the money and speculators' trading accounts as well. So, a bull market would help. A bull market everywhere else in the world would help Bitcoin, I'd expect.
Okay, well, if we have no other questions, we just wanted to share that we're going to be doing one more webinar on this topic just before the US election. That's on the 3rd of November, if I'm not mistaken. Fawad?
So that's on the day Yeah, I think you're right. I think that's the
Yeah.
day that the elections are happening. So obviously we won't know the outcome
Yeah.
of the election until 1 or 2 days later. So yeah, it's going to be a very interesting time.
Or maybe weeks. Who knows?
Or maybe weeks. Yeah, if it gets. Yes, there's a question. Where can we find the recording? We were discussing putting this webinar on YouTube. So I think we're going to do that after the webinar ends. We're going to post the recording of this on YouTube. So I'm just going to post the link for our YouTube channel in case you were wondering. Let me just find it. Your videos. Okay. Okay.
While you're looking for that link, we also have a webinar with live market analysis next week, again at 11:30 London time.
Yeah, so the live market analysis webinars are basically more chart-based and technically focused. So if you like trading short-term, I will be fronting that one. I think Victor will be there with me as well. We'll have lots of scenarios, levels to watch, etc., on the major asset classes. I think you were going to mention the non-farm payrolls webinar as well, weren't you there, Victor?
Yeah, sure. That's going to be after the election, right?
Yeah, that's correct. So every first Friday of the month, we have the US non-farm payrolls report. So going forward, we will be providing a preview webinar for those job reports. So the next one is going to be on the, let's have a look, on the 6th of November at 11:30 London time. By the way, London is going to move to GMT hours, I think, in 2 weeks' time. So make sure that, if you're tuning in from other regions of the world, that you follow the London hours based on the time difference.
Right. So that's about it, I guess. No more questions. Thank you all for your attention. Be sure to check out the Think Trader app and our best-in-class software offering for trading financial markets. And we wish you a successful and happy trading.
Yeah, thank you so much for listening to us, guys. And here is the link for the webinars, the upcoming webinars, in case you are wondering. But yeah, thank you so much for listening to us. I wish you guys have a wonderful week ahead and success in your trading. Take care.
Okay. Thanks, Fawad. Thanks, Victor. And thanks, everybody, for tuning in. We'll catch you in the next one. Bye-bye for now.
Thank you. Bye-bye.